Welcome. Well, thanks to the modern technology, we're going to be crossing to London in about 15 minutes to pick up on the latest analysis of the gold market. If you've got any gold shares, or indeed if you're interested in what happens to the rand, because like it or not, when the gold price goes up, the rand seems to strengthen. Doesn't seem to make a lot of sense, but that's the reality if you follow the graphs on the two of them. We're going to be crossing to GFMS and talking with William Tankard. He's just done the analysis on de-hedging. That's quite an important part because gold mines, particularly in the past, used to sell a whole lot of their production forward and in that way flood the gold market with product that actually hadn't been mined yet. Well, in the past few years they've been cutting back on that big outstanding position and did this again in the third quarter. We'll find out the extent of it and exactly what to expect from the gold market as the de-hedging continues, or does it? William Tankard will be with us later. He's from GSMS. Also in the news right now, if you particularly happen to be in South Africa, there's the announcement coming out tomorrow from the Reserve Bank. The Monetary Policy Committee is meeting as we speak, and tomorrow afternoon their deliberations will result in either yet another interest rate increase or leaving interest rates on hold. Very unlikely that they're going to cut them, and indeed the question now is not if the rates are going to be increased, but by how much, and then when's the next one. Helping us through all of this is Arno Lawrenz. He's the Chief Investment Officer of Atlantic Asset Management. He's down in Cape Town. Arno, the MPC tomorrow has been quite well telegraphed by the Reserve Bank Governor, Tito. He did say that if it was up to him, he'd be raising interest rates. It seems as though it's a 100% chance now, in other words, a certainty that rates will rise tomorrow.
Yeah, I don't think they need to deliberate too much on that issue, Alex. I think it's, as the governor has said, is if it was up to him, he'd hike. All of the data that's come out as far as the inflation is concerned has really been on the upside, on the bad side of the expectations. And really, if they look at the basic data, there's pretty much foregone conclusion that they need to do what they need to do, which is hike rates.
This will be the 8th rate increase in succession. Have we had a precedent before for so many on the trot?
I'm not sure of the exact amount. Maybe I haven't been in the market for long enough, but I'm sure if we went back to maybe the days of Christophe, one of his favorite methods was to hike rates. We remember 1998. I think that was probably the worst. But yes, in the most recent past, it's the most significant hike or series of hikes that we've seen so far.
What else do we look for in what Tito has to say tomorrow, Arno? In the language of his presentation, perhaps?
Yeah, I think what we're really trying to get to is to get a sense of how concerned they are about inflation expectations. We make forecasts of inflation and we get them wrong, we get them right. They themselves have a model. Those models also sort of fail at times. And what you really need to get a sense of is how tight do you need to make this move. So we need to get a sense of what their reading is of inflation expectations. Now, the difference between inflation expectations and inflation as we see it when it gets printed is inflation expectations is forward-looking. And this is the key thing here, is that they cannot just respond to what's happening at the moment with inflation. They must say, what is the impact of the cumulative effect of, well, we've had 7 already, so if we assume tomorrow they come out with another hike, what is the cumulative effect of that 8th hike going to be doing to inflation and to inflation expectations? That's the critical aspect that we need to try and get a reading on. And again, over and above the inflation expectations is how concerned are they about the growth trajectory going forward.
Now, it's not only you who's having a look at or doing your calculations on what might happen to interest rates. The whole money and capital markets are doing the same thing. What is the combined wisdom of people like yourself telling us about the next round in February? Will there be another rate increase?
Yeah, the market is basically pricing in a probability of another rate hike, probably around about a 20% probability at this stage of another rate hike in February. And then going forward, the market's still a little bit uncertain about what comes afterwards.
Oh no, 20%. 20% is not a high probability. You could say 80% chance of no interest rate increase in February.
Yeah, I think let's wait until after tomorrow afternoon and then we can see if that probability increases.
So watch the language that the governor is giving us, particularly about inflationary expectations.
Yeah, I think so.
The economic data that we have been receiving, particularly in the past week, has been all over the place. Yesterday, the FNBR came out with data which looks like consumers are very excited. The car sales, on the other hand, show that it's exactly the other way around. How are you reading it?
Yeah, I'm not so sure about the consumer confidence side of things. It really was a bit of a divergence from some of the other data we've seen as far as the economy is concerned, in particular the car sales. So that was a bit of a shocker to the market. Again, it's one of those things where I think what we need to do is maybe just diverge slightly and say it's not just about monetary policy as far as the economy is concerned. It's also about fiscal policy. And, what is the government doing rather than just the Reserve Bank doing as far as the running of the economy is concerned? And again, what we've seen over the last year, and in fact I think 2 years, is budgeting or getting a budget surplus in place and even forecasting for that to go forward as well. That's a bit of a tightening of the noose as well. And I think the combination is what we really need to look for. Again, consumer confidence side of things, it's one segment of the market. We're not seeing the same sort of things as in international markets where you've got housing prices falling and so forth, which has a major impact on consumer confidence. What we're seeing is for a very positive environment as far as that is concerned. Money supply figures are still pretty strong. Private sector credit is still strong. So yes, the interest rates are biting, but it's only a very particular segment of the market.
So far, so good. Let's now have a look into next year. If you talk to your political analysts, they'll tell you that a change in government or a change in leadership at the top of the ANC is going to have a dramatic impact lower down politically, perhaps even economically. You've now spoken about fiscal policy, in other words, government spending. If there were a more profligate finance minister than Trevor Manuel in place, what would the money and capital markets, or how would they react?
It's a tough one, that one. It depends on who it is, I think. And again, it comes down to succession planning. I'm sure that what that should be in place is some form of identification of who the relevant people are, and then sort of a grooming of that. And I know, for example, within the Reserve Bank, it's actively discussed. And I'm sure that must be the same case in government as well, and within the ANC. And I think what we need to respect is that, it's not just one person at the top making policy decisions. The way that ANC works is a much more collective decision-making basis. And, even at this conference in Polokwane as well, is that there's going to be an approval of policies which have been debated already over the last, 6, 12, 18 months.
So you're buying that story, are you? You're buying the story?
Yes. I do buy the story. I'm not saying that there's going to be no policy change, but I do believe that what you're going to be seeing is a pragmatism coming through.
Arno, going back into the history of South Africa, there was a period, an extended period in this country, where fiscal policy was out of control, whereas monetary policy was held very tight. That wasn't good, because you had mixed signals. If one were to have a similar situation, given that Jacob Zuma is supposed to be a populist, how would that impact the money and capital markets? I hear what you've said, and you've said you don't think it's going to happen, but if that were to be the case.
Yeah, if it was to be the case, then again, market perceptions are a very dangerous thing, and it becomes a herd instinct, which is everybody's going to run for the door and say, well, look, if there's uncertainty, we've got to price for it. We have to basically say, take money off the table, wait until there's more certainty, not just, again, one of the things of proclamations of saying we're not going to change anything and so forth. It will be a let's wait and see. So yes, there's two things I would say immediate impact. Number one, probably the rand would get a big crunch upwards. Again, with the big danger of capital flight. We haven't quite got exchange controls out of the way yet, but it will be foreign capital to a big degree. And then the second one would be bond yields, and I think they're almost certainly what you'd have is a sort of a commensurate increase in bond yields together with the currency increasing, because obviously the two are pretty much interlinked. So it's not going to be a pretty picture if we were to get something in that scenario.
Well, I guess some good news on that side is Hugo Chavez is having his wings clipped in Venezuela, and he was the new socialist for the world. So I guess it doesn't matter who takes over in South Africa, they'll have to take cognizance of the international community in this era of globalization. You can't just do things on your own anymore.
I think, Alex, that's precisely the point, is it comes down to pragmatism and a realism. And again, let's go back, 13-odd years, 1994, our first democratic elections. One of the policies of the ANC prior to that election was a nationalization of key states, of key assets. Did that happen? No, it didn't. It was a pragmatism, it was a realism, a realisation of what was needed in terms of an interlinked global village, if I can use that word, of capital flows that can shift very easily, and even more so today than what it was in the past. So regardless of who the president is, I think of the ANC, is that there will, at some point down the line, there will be an emerging pragmatism and realism in policy.
Arno Lawrenz is the Chief Investment Officer of Atlantic Asset Management. And I guess for you and I who have home loans, or those of us who do have home loans, there's some good news there. It doesn't matter who's running the country, is to be forced upon them to bring in good policies. Well, Arno believes it. Do you? We're going to be crossing to London in just a moment to find out more about gold. Stay with us.